Hi, my name is Michelle Holmes, and welcome to another edition of CMS Forex News. Today is Friday, May 9, 2008. European stocks came under pressure as news that American International Group reported a $7.81 billion loss. This refreshes concerns about the credit crisis, especially as oil surges near $125 a barrel. Citigroup said it was going to shed $500 billion of assets. Shares of financials like HSBC and Barclays led the decline in the UK and European stocks indexes, where shares were down 1.3 and 1.7% respectively. The Dow Jones Industrial Average followed suit, sinking more than 1% as of 1:30 p.m. The atmosphere in stock markets increased risk aversion for carry trade positions. The pound-yen pair continued its steep fall that started at the beginning of this week. The pair slid nearly 800 pips since the week's open, breaking through support at 205.50 and 202.50. Finally, the pair found support just below the 200 level during the New York session. The euro-yen pair was weaker as well, touching below 159 during the New York session. The yen did most of its damage against the euro in a 370 pip fall in the middle of the week. Another benefactor of this increase in risk aversion was the Swiss franc. In the last 3 sessions, the euro-franc pair has slipped 250 pips in the franc's favor. In addition to weaker stocks, the Eurozone and Germany released data that showed the economy losing its momentum. The pound-franc pair fell almost 150 pips in today's session alone. The only significant U.S. release today was the trade balance. The deficit for March narrowed to $58.2 billion. Imports declined close to 3%, the biggest fall since December of 2001. Exports were also down, but to a smaller degree. The euro-dollar pair continued its rally that started after it set a low near 1.53 prior to the ECB decision on Thursday. The pair is slightly above the level at the beginning of the week. Despite losing to the yen on risk aversion, the euro did gain on the greenback. The US dollar-Japanese yen pair slid almost 300 pips the last 3 sessions as it found support near 102.60 in New York trading. As we mentioned earlier, US stocks were lower on the day while oil surged to a new record high. The yen and the effects of risk behavior should play a strong role in currency markets next week, as global stocks have been relatively better in the last 3 weeks before coming into this one. The Canadian economy added 19,200 jobs in April, beating forecasts. Jobs grew by more than 40,000 in January and February, but have been somewhat subdued for March and April. Nevertheless, the workforce is resilient. The unemployment rate inched up to 6.1% as more Canadian workers entered the labor force. The Canadian trade surplus widened 5.5 billion Canadian dollars. Exports rose 1.6%, the 3rd straight month of growth. Higher prices were the main factor in the improved trade balance, as volume was generally lower. The trade surplus with the U.S. rose to $8.6 billion compared to a $3.1 billion deficit with the rest of the world. The Canadian dollar strengthened more than 100 pips against the greenback, with most of those gains coming overnight. The positive data from Canada helped support the loonie during New York trading, and the pair was trading near 1.0060 by noon New York time. Next week, we'll start the producer prices from the UK on Monday and consumer prices on Tuesday. The U.S. releases retail sales on Tuesday and its CPI on Wednesday. Thursday will be busy as markets digest first quarter GDP numbers and CPI data from the Eurozone, along with a slew of U.S. releases, including the New York Empire and Philly Fed indexes, industrial production, and foreign flows. That wraps it up for the weekend Forex News. Join us here again Monday at cmsfx.com. Have a nice weekend.